everything that we have planned for the day. So, quick recap on what we covered yesterday. We remember our first session was on the economic growth and sustainability during and beyond COVID-19, where Professor Tibaijuka, who was chairing this session, moderated well, and we had good presentations from Professor Samuel Wangwe and Professor Christopher Adam and the other discussants. And then in the afternoon, we had a very interesting topic, accelerating digitization for recovery and sustainable growth. The session which was led by Professor Ngowi. And we saw how a lot of participants aired their views on how best we can tackle this matter going forward. So this morning we'll have one topic on digital currency, which will be followed by a second session in the afternoon, scaling up private sector credit beyond COVID-19 pandemic. So naomba tujitayarishe, tuwe tayari ili tuanze kwa wakati na tumalize kwa wakati. Niwape dakika chache, please continue networking. We'll be starting in the next 5 minutes. Karibuni sana.
Sekta ya fedha ikiwa na taasisi nyingi inafanya mambo mengi yanayohusiana na fedha. Wananchi wanatumia benki mbalimbali nchini kwa maendeleo. Elimu na ushauri maridhawa wa mikopo hutolewa kwa wananchi. Ili kuepuka mikopo chechefu, mabenki yamejipanga kutoa mikopo ili miradi mingi ya kimaendeleo iende kasi.
Sekta ya fedha muhimu kwa uchumi wetu. Ni sekta ya fedha, kichocheo bora cha maendeleo. Sekta ya fedha muhimu kwa uchumi wetu. Ni sekta ya fedha, kichocheo bora cha maendeleo. Uaminifu, ubunifu, nidhamu ya kazi iwe wimbo wenu. Uaminifu, ubunifu, nidhamu ya kazi iwe wimbo wenu. Sekta ya fedha, sekta ya fedha, sekta ya fedha. Sekta ya fedha, sekta ya fedha, sekta ya fedha. Ili kuongeza kasi za maendeleo, tuzo za miamala.
Hello. Thank you very much. Good morning once again. Habari za asubuhi, karibuni sana kwa siku yetu ya pili ya mkutano wetu. Matangazo machache. Kwanza, waandaaji wetu wametuandalia tent pale nje kwa ajili ya kuchanja ile homa yetu ya COVID-19. Kwa hiyo kama hujachanja, huduma ile inatolewa pale free kabisa, ujisikie kuwa huru kwenda pale ili uweze kuchanja. Jambo la pili, I would like to take this opportunity to thank you very much for attending our cocktail yesterday. Kwa kweli tumefurahi sana. We are so delighted and happy to see all of you. Wale ambao tuliseviwa chai, basi chai ile itaendelea tena. Kulikuwa na ombi kutoka kwa wajumbe wachache kwamba session ya mchana tukafanyie pale viwanja vya Nashera. Hilo ombi nimeliwasilisha kwa governor, sijui kama limekubalika, ila tutaliangalia. Basi tuingie kwenye session yetu ya leo. The first session will be accelerating digitization. No. Digitization for no. Yeah. Session 4, digital currencies, experience risks and regulatory issues. We have a good number of presenters, including some external will be presenting from Zoom directly. But the chairperson of this session is none other than our very own Sostenes Kewe. Let's put our hands together for him as he comes to the podium, please. Kewe, karibu sana. Karibu, karibu. Tumpigie makofi tafadhali. Wengi tunamfahamu, sina haja ya kumwelezea. Sina haja ya kumwelezea, atajielezea mwenyewe. Lakini niliomba nimkumbushe kwamba session yake itaenda mpaka saa 4 ili ule muda usije ukazidi. Kewe, karibu, feel free to sit anywhere.
Good morning, ladies and gentlemen. I'm sure you're all set and looking forward to this exciting session. When you talk about money, always it's quite exciting. So I'm privileged to be a session chair on digital currencies, a topic that is has taken the center stage in the world. Challenging orthodoxies about money. So I would like to welcome everybody in this room and whoever is actually following remotely, digitally, electronically, to a session that you want to know anything about the future of money. Central bank digital currencies is the center of our conversation today, which will be really enthused by many of our speakers who will be coming forward soon. And for me, it's an honor to talk about blockchains, crypto assets, digital currencies, when the world is actually advancing, particularly when it is this issue of COVID accelerating or changing the way we think about many things, including money flows. So today, I have the honor to introduce the speakers. We'll have the main speaker. This is none other than Inutu Lukonga from IMF. I'm equipped with a good number of panelists, very experienced. We'll have Tim Marcella from South Africa, but I'll introduce them as they come in when they start speaking. But here in the room, we have Nkundwe Masaga from the Dar es Salaam Institute of Technology. Please come forward. So he will tell us a lot about the regulatory space in this area. Then we have Sandra Chogo. Please come forward and take a seat. Sandra is an auditor, is an accountant, but has done a lot in this area of blockchain. She will share with us a lot of experiences, her own experiences, and then excite you as well. I have John Smrusha. He's a digital finance expert. He's done a lot in this area, and he has, a passion for cryptocurrencies. So he will be also sharing with us what he thinks about central bank digital currencies. I have Engineer Kabenda, a practitioner, very exposed in this area as well, done a lot of work, not only in this country, but also outside, particularly the East Asian markets. And I have Rafli Galama, who will also really center around the monetary policy issues that relate to digital currencies. So I'm sure we are ready to kick off the main presentation, and I hope technology is all set.
Can I start?
Okay, so I think while we're waiting for technology to be set, now we start our session and we'll listen to Inutu Lukonga. As I said, I'll introduce these speakers as they come in. It's time to listen to Inutu, and I want to say a bit more about her. She's a senior economist in payments and currencies and infrastructure at the monetary, at the IMF. She has done a lot of work, actually. She has extensive experience, practical experience to be precise. As a central banker in Zambia, she's worked in many places around the world, particularly focusing on macroeconomic, financial sector, leading missions that have dealt with payment systems, monetary policy, foreign exchange operations, and her experience expands to over 25 countries across the globe. So she's worked also for UK FSA, as a regulator of banks, security firms, and related funds, particularly pension funds. Her research interest, has taken her to debt restructuring, and also, areas like, Islamic finance, fintechs, and digitalization. So this is the reason why I think the central bank, when we were designing this conference, thought of getting, this wealth from her, and then, also apply it for our own context. So having introduced Inutu, I would like to welcome her. I'll say more about Tim Marcella from the Reserve Bank of South Africa when we welcome him to talk to us. So Inutu, if you are ready, please take the stage. Thank you.
Thank you very much. It's a great pleasure for me to participate in this conference. I would have liked to join you in person, but we still have restrictions in terms of travel. So let me now share my screen. Let's see. Just want to share. Can you see my screen? Hello?
Not yet. Yeah, now it's there.
Yes, you may see your screen.
Okay. So you can see the whole screen now?
Yes, yes, yes.
Okay, thank you very much. So I will be speaking on central bank digital currencies, experiences, risks, and regulatory issues. I have structured the presentation into 5 parts. I'll begin with a brief overview of CBDCs, and I'll follow this with a discussion of design options, benefits, and challenges. Thereafter, I'll give you brief highlights on country practices and follow this with legal and regulatory issues relevant to CBDCs, and then conclude with key takeaways. So first, what is a CBDC? There are many definitions out there, but the BIS defines a CBDC as a digital payment instrument denominated in the national unit of account that is issued by a monetary authority and remains a direct liability of the central bank. Now, a CBDC may use DLT and cryptography. This is the technology that underpins crypto assets, but it is fundamentally different from the other digital assets. First, a CBDC is issued by the central bank or government as a liability of the central bank. It enjoys the same guarantees that backs the sovereign paper, and it is risk-free. In terms of price, it is determined the same as the fiat currency, and it can be used as money, as a unit of account, a medium of exchange, and store of value. This is very different from the crypto assets. Take, for instance, the stable coins. The stable coins are issued by private companies and are a liability of the issuer. They have no government guarantee. They're supposed to be 100% backed by reserves, and they promise to redeem on a one-to-one on demand. But not always do they have full reserves, as you would have seen the case of Tether recently. Sometimes they can have reserve shortfalls, and this can lead to confidence crisis. In terms of price determination, they try to achieve price stability by pegging to a fiat currency like the US dollar, or sometimes the commodity price like gold. But the peg is always not guaranteed. Then in terms of Bitcoin, this one is even much more different. It's created by users through a consensus mechanism, and it's not a liability of any entity. It has no central authority to back Bitcoin. It has no intrinsic value, and investors can lose all their capital. The price is market determined and highly volatile. And because of that, it can only be used as a speculative asset because the price volatility precludes it from being used as a medium of exchange or as a unit of account. Now, CBDCs can be retail or they can be wholesale. Retail CBDCs are intended for use by businesses and ordinary citizens. Wholesale CBDCs, on the other hand, are used to settle transactions between authorized financial institutions, and they are not available for use by the general public. Now, if you look at this map, you'll see that many central banks are researching into or conducting pilot experiments to issue CBDCs. We've already had 2 issues by the Bahamas and Nigeria. In terms of motivations for issuing retail CBDCs, these vary across countries, and they also vary according to regions. In emerging market and developing economies, we see that CBDCs are mostly motivated by the need to enhance financial inclusion and also to improve efficiency of payments. In advanced economies, the major motivating factor is the declining role of cash and the emergence of new digital payments and geopolitical factors. So let me now come to the design options and the benefits and challenges that they present. Now, CBDCs can assume a variety of designs depending on your policy objectives. First, countries have a choice between issuing a direct CBDC or an intermediated CBDC, or what we refer to as a two-tier. The ledger can be centralized or can be decentralized. In terms of accessing the CBDCs, it can be accessed using the account, like digital wallets, or you could have a token. And the CBDC can be designed for domestic purposes only, or you could design it for cross-border use as well. It can also be interest-bearing or non-interest-bearing. And you have a choice to put a limit or cap on the e-wallet holdings and all the transaction limits. In terms of functionality, you can design it to be online or offline or even both. And you also have a choice in terms of the degree of anonymity that you want to program. And then you have a lot of other choices that you need to consider, like the cost structure, the fees to be charged for participants and end users, whether you want to include non-banks, or the degree of interoperability that you want. Let me take each one of these one by one and elaborate. Starting with a direct or intermediated CBDC, the designs imply different operational roles for the central bank. In a direct CBDC, the central bank issues the CBDC and it distributes it directly to citizen accounts and it manages all the ledgers. Now, proponents of this model say that this will enable the central bank to implement monetary policy more directly. Also, it can facilitate faster stimulus disbursement and financial inclusion. The major challenge is that it imposes a significant burden on central bank operations and IT infrastructure. The other model is the two-tier. Here, the central bank would issue the CBDC, but commercial banks and other regulated intermediaries would interface with the clients. The beauty of this is that it does not disrupt the existing financial system structure. But if it's coupled with account-based, it might only serve clients with bank accounts and may not guarantee financial inclusion if that is one of your objectives. In terms of the ledger, a CBDC can operate using a form of DLT, or it could be operated on the traditional centralized ledger technologies. For centralized ledger technologies, this would require the central bank to manage and transfer the liabilities. The risk there is that you could have a single point of failure. If you choose DLT, on the other hand, you have a choice between permissionless or permissioned DLT. But so far, private permission DLT is the one that has been preferred for CBDCs. In terms of benefits, you have greater security because of the decentralized and immutable nature of DLT. You also avoid the single point of failure. And it can also facilitate peer-to-peer transfers as well as offline payments much easier. But the big challenge is that it raises privacy issues. There's also the issue of higher costs for the central bank and intermediaries, because you have to develop a new infrastructure with adequate security and processing capacity, or you have to adapt your internal systems. Then when it comes to the access models, the issue of whether you want to access CBDCs via the account or as a token, these options imply different degrees of privacy, but the two designs can also coexist. With account-based CBDC, the identity of the user is the one that is verified, pretty much like the way you do with bank deposits. This facilitates monitoring of illicit activities, but the only disadvantage is that access could be difficult for the unbanked. You also require digital identities, and offline capabilities may not be that easy to implement. With a token-based CBDC, here, the money is the one that is authenticated and not the owner. So it works like cash. A $100 bill is a $100 bill, as long as it's not a counterfeit. It doesn't matter who's holding it. But the challenge here is you could heighten financial integrity risks. Then when it comes to the choice of whether you want your CBDC to be just domestic or cross-border, there are also some advantages and challenges. If you decide to have your CBDC to have the functionality for cross-border use, the advantage is that it increases the speed and it reduces the cost of foreign exchange transfers. But you also face the same challenges that hold back other cross-border payment systems, such as differences between the legal and regulatory frameworks of different countries. There's also the issue of your system has to be interoperable with the other countries. Now, if you are a recipient of a foreign CBDC, then you have greater challenges because that can lead to current substitution in the recipient countries and increased dollarization, which could impact your ability to conduct monetary policy. Now, when it comes to remuneration, technically, a CBDC can be designed to be interest-bearing. But here, the benefits remain very highly debated. Proponents say that an interest-bearing CBDC would give the central bank additional monetary instrument for steering real economic activity and inflation. But the big challenge here, the big trade-off, is that if you remunerate the CBDC, you increase the risk of disintermediating bank deposits. And you could also increase the funding cost for banks because they have to compete. Now, at the same time, the other issue is negative interest rates are very difficult to implement if we continue to have cash. And the prospect of cash disappearing is very, very unlikely. Now, a number of countries have introduced caps on how much can be held in the digital wallet for CBDCs to minimize disintermediation risk. This is a good feature. The only disadvantage is that if the cap is set too low, it could reduce the adoption and use of CBDCs. In terms of functionality, you have the choice between online and offline functionality, or you could have both. Offline functionality is critical for countries that are prone to natural disasters, because that way you can transact in any situation, even if you don't have electricity, even if there has been a hurricane. But you have to mitigate the risks. The two risks are double spending risk and settlement risk. A critical design feature from a policy perspective and user interest is the degree of privacy that a CBDC will facilitate. You have a choice between having a CBDC that has full anonymity or pseudonymous, or it could be transparent. If it's anonymous, It ensures the privacy of citizens. But the challenge is it can facilitate illicit activities. If it's transparent, it minimizes illicit activities, but people might not be keen to adopt it. Who wants to have every transaction known and recorded? Then the other design considerations which we talked about is the cost structure. You have to make a choice whether you want to charge fees for the use of CBDCs, whether you charge the participants or the end users. And there's also the question of the role of non-banks. If non-banks are going to provide digital wallets, should they be allowed to have access to central bank facilities? And there's also the question of interoperability of the CBDC with other domestic systems and foreign CBDCs. Let me now come to the country practices. What have we seen so far? What we find so far is still very early. Countries are still considering design options, but we are beginning to see some emerging convergence. First, the need for CBDCs to coexist with cash is almost universally accepted. Second, the two-tier model is the one that is preferred. We have not yet seen a central bank that has decided to have a direct CBDC where the central bank issues the CBDC directly to the clients. Permission DLT is also the one that has been chosen in many pilots, but we are also seeing some countries combining both the centralized conventional infrastructure with DLT. In terms of access, most countries prefer the account identification than the token. But we have a few countries that are combining both. And then in terms of decision as to whether it should be focused on the domestic or cross-border, what we are seeing is that a lot of countries are focusing on the domestic market. But there is increasing recognition that early on, when you are designing your CBDC, you should make sure that it has cross-border functionality, just in case at a later stage, you want that function. In terms of remuneration, this is advocated mostly in the academic literature, and we have not seen that by central banks. Also, many countries are considering limits. This is very popular. And countries prefer to offer both online and offline functionality. There's also a preference for limited anonymity because of financial integrity considerations. Another issue is that before you decide to have a CBDC, you want to consider the potential effects of a CBDC on monetary policy, on financial stability and integrity, and also on how it will affect your payment system structure and development. You also want to look at the potential advantages of a CBDC over other options, such as fast payments. Now, in terms of project management, what we are seeing is countries are opting for establishing high-level task force that have power to make political difficult decisions and to provide a strategic direction. So here what we see is that a CBDC is not just a decision by the central bank, but also should involve the Minister of Finance. Now, this task force should be supported by working groups. One, on macro-financial and legal aspects of CBDCs. The other working group is on technological issues in order to provide support to the task force. In terms of legal and regulatory issues, we see 5 areas. 1, the legal powers to issue a CBDC and the legal tender status of CBDCs. There's also the issue of the oversight of CBDC payment system. And then AML-CFT compliance, the cross-border use of CBDC, and a host of other enabling regulations that you need to have in place. In terms of legal issues, as I indicated, the CBDC should have legal powers that are established in the central bank law. The central bank should have powers to issue a CBDC. You also want to clarify the legal tender status of a CBDC. Now, the evidence that we see from many countries is almost invariably a lot of laws were written before digitalization, and therefore they have required to be amended. In terms of payment system oversight, a CBDC is a new payment system. So if your law mandates you to operate interbank payment systems only and does not cover general public, then you have to amend the laws. The second issue is the oversight of the payment system. PFMIs are the ones that govern oversight of payment systems. But right now, not all PFMIs are relevant for CBDCs. And standard setters have not yet developed PFMIs for CBDC oversight. So you have to establish the rules and regulations for payment system oversight. In terms of AML-CFT, FATF has issued regulations for virtual assets, but CBDCs are not categorized by FATF as virtual assets, but that does not preclude them from the need to comply with AML-CFT rules. You also have new wallet service providers and intermediaries. All these need to comply with AML-CFT regulations. There's also the question of who should oversee the new payment service providers and what kind of institutional or organizational arrangement will be needed. Then when it comes to the use of CBDCs in cross-border payments, if you have to design CBDCs for cross-border, this will require harmonizing the global frameworks and standards. There's also the question of whether cross-border use of CBDCs could raise issues for those countries that have exchange controls. Now, for the benefits of CBDCs to materialize, you also need an enabling environment, including a range of laws and regulations. And many of these laws would relate to cybersecurity, data governance, competition policy, digital technology policy, the digital identities, and also regulations for privacy and consumer protection. So what do we conclude from all this? What we see is that CBDCs present opportunities, but there are also challenges. In terms of opportunities, CBDCs could help reduce the cost of cash production and distribution, especially for those countries that have a lot of remote areas. It can also increase competition in retail payments. It can enhance financial inclusion and the resilience of payment systems. It can also foster greater efficiency in cross-border payments, improve innovation, and ensure that countries retain their monetary sovereignty. But there are also some challenges depending on how you design. So the design is going to be very critical in minimizing these risks. Risks like the disintermediation of bank deposits, increasing bank funding cost, causing destabilizing runs into central bank money, or increasing the cyber threat landscape, and also the exposure to plural legal systems when you have a CBDC with cross-border functionality. Now, issuing a CBDC, as you have seen, is not an easy task. There is no off-the-shelf CBDC solution. You have different design choices from which to choose from. So you need to have a comprehensive and balanced policy-oriented assessment of all the challenges of the CBDCs and compare these to alternative options before you consider issuing. You need to balance the policy trade-offs very carefully. And you want to take into account the views of institutions, the views of citizens and other professionals to serve as an input into your feasibility assessment. The best way is to hold public consultations. You also want to consider introducing national IDs. Now, another important issue when issuing a CBDC is the practical experimentation. You want to have a pilot in order to test the functional design options and explore the technical feasibility before you actually launch the CBDC. You also want to have a clear legal framework to establish the legal basis for issuing, distribution, use, and destruction of the CBDC. A CBDC must also be supported by robust technology, and market readiness is needed in order for the CBDC to be widely accepted. Therefore, public education will be very critical. And finally, a CBDC design should embody the foundational principles. 3, in terms of 1, the CBDC should do no harm to the wider policy objectives. It should also ensure coexistence and complementarity of public and private forms of money, and it should promote innovation and efficiency. Thank you. That brings me to the end of the presentation. I don't know whether we still have time, but if we don't have time, then I want to cover the last 3 slides. Thank you.
Thank you. Thank you very much, Inotu, for this exciting, thoughtful, well-packaged, quite comprehensive account of central bank digital currencies. I'm sure the audience has really, gotten something that, we can comprehend for moving forward and thinking about what is useful for our economy, for our societies, not only in Tanzania, but also around the globe. I think what is critical here, and as I listen to you and following your presentation, it's a number of issues that are being raised that we need to unpack. So hang on if you can for a little while, because there'll be a Q&A, and there's some areas that would like you to explore more for us to build a better understanding, but also give some perspectives. We have really tough questions to be answered here. So as we do this, I think, having listened to Inotu, I would like now to start a conversation about digital currencies, and then we'll home in the central bank digital currencies, just that we have heard from Inotu. To kick off this one, I would like to talk more about, why does it matter? To whom does it matter? Where are the opportunities? And how can it be beneficial to us? And therefore, if it is us, means the government, the businesses, households, individuals, women, young people, different sectors, and all that. So I would like to ask Jones Mrusha. So you are really passionate about cryptocurrencies. Tell us about more, and feel free to talk about blockchain and crypto assets in general from the use cases perspective. Over to you.
Sorry, I thought we were missing. Is it on? Can you hear me? Yes. It's just making noises. So following Lukonga's presentation is going to be a tough act. And I see the room, they probably had a very good breakfast this morning. So allow me to borrow what I learned from moderators yesterday and asking in the room, if you don't mind, as a wake-up call, how many of us in the room, and please don't be shy, I'm sure the regulator won't judge, how many of us in the room own any sort of digital currency wallet? I see a few hands. Kawe, I've seen yours. Don't run away. 5, 10. How many of us do have, if you leave alone bank account, that I'm sure all of us do, how many? Yeah, black is my favorite color. Thank you. How many of us in the room do own any sort of wallet if you leave alone bank account, meaning mobile money, any other digital wallets? I see even the governor has one, so I'm assuming everybody else has one. How many of us in the room right now or back in our hotel rooms or wherever we came from do have cash? Let's just leave it in the room. How many of us do have cash in our wallets right now? Almost all of us except for the few there that are blocked. What does this say? It says we do trust in God, but everything else in cash. Meaning, if you look at how do we engage formally on the digital finance systems, we really assess what are the risk of one handing over their hard-hand income into some sort of a wallet account or ledger. And I think part of the takeaways as I follow up Lukonga's discussion will be looking at what are the opportunities, as Kewe asked, across different players in the ecosystem as far as, for this case, cryptocurrencies and any other wallets they are concerned. I know, Kewe, you asked me also to touch on blockchain, but if I may ask to be excused, because I'm sure there were some few that were prepared to look into blockchain and some other examples. But to bring it home, let's note these definitions of what a blockchain is, applicability, scarce. I just want to highlight for those that are coming from Zanzibar, you probably heard of one popular story of the first blockchain baby being born. You can all guess where this baby was born. Whenever we ask this question, people miss out. They think, oh, maybe Sweden, maybe Lithuania, or any other country that is digitally advanced. But to our supplies, it's in Zanzibar. So a mother was tracked using blockchain ledger. The records were kept and maintained and updated there until the baby was born. All other processes that were involved with vaccinating and registering the baby were on the blockchain. And it's a very famous story. I urge all of you, if you have some time, please just go Google blockchain baby Zanzibar or Tanzania. You would see applicability of the blockchain, not in a way that we are normally scared with when it comes to cryptocurrencies and other use cases. Now, to directly save some time and answer the question that has been posed, I think one of the biggest benefits as far as the regulator central banks are concerned is avoiding risks that are slowly forming with creation of private, or what others would like to call decentralized currencies. Whether we like it or not, there is a lot of capital being flown out of the country in one way or another, invested, or I wouldn't call it investing, but buying into these cryptocurrencies. And since we don't have a regulatory framework to do house what is referred to as exchange to cash out whatever is invested, that money is not coming back. When it's gone, it's gone. And all of us here can share a story of somebody being invited on some schemes only never to recover whatever they've considered to have invested. So as far as the country and the central bank is concerned, I think managing the risks of privately issued cryptocurrencies, this is one key important. Supporting the resilience of payment landscapes, we have seen situations where no names mentioned, but payment platforms that are used by millions of people that will go down for a day or two. Not intentional, but whatever the engineers in the room will tell you, whatever goes up, someday it will come down. No matter how hard you work with the resistance plan, with the business of continuity, at some point it will fail. So having a CBDC that is well managed, and as Lukonga has highlighted, some could even be a disputed ledger vis-a-vis centralized, it will help with that kind of setup. And the future, when it comes to payments in the digital economy, what we do have right now might not be sufficient to support it. The system that we do have, the NPS team in the room might agree, Madam Shahid, as much as we are doing the best to digitize it and fast-track fulfillment of the transactions, we do still have glitches. There are so many partners, so many movement, sometimes between the bank and the settlement at the central bank, there's already a player inside. Now you can imagine how many other layers of players there are there between bank and a final consumer. There will be also an advantage on addressing the consequences in declining use of cash. I know, looking at the survey we just did, a lot of us do have cash in our wallets, but slowly, you will agree with me, and I did a cashless challenge a couple of years ago, just assessing how practical is it to live for 3 months without having any hard cash in the pocket. If I have to do the same today, I'm sure the results will be very different. There is a decline into the use of cash. Take Dodoma, where we are at the moment. Regions like Dodoma, Arusha, Mwanza, not even Dar es Salaam, and Mbeya, if you go back to 2020 financial reports by the central bank, you would see almost 58% of the total banking transactions, they're happening outside the bank. So Governor yesterday spoke on the increase of number of wakalas and respective transactions. You would see as that number continue rising, cash uses will decline. The few missing gaps, there are so many players in the ecosystem that are working hard to continue covering. That way, the value and supply chain of most of our fast-moving commodities or purchases, they're fully digitized end to end. Once those gaps are closed, we would have, and that's what we like to see, I believe. I can't think of anybody in the room that would prefer using cash vis-a-vis digital means, unless they don't want to be transparent on their transactions. But how do we address the future decline of cash use? We believe there's a lot that can be done using CBDC. One last point that I think you also touched on, and it was a challenge that I think we're still trying to solve, is when we come to cross-border payments. I know when we look at CBDC, majority of scholars do agree that maybe it's more of a challenge than an opportunity. But if you look at, for example, East Africa payment system, if ever the community decide to have one currency, my argument, and I strongly believe in this, instead of trying to make an East Africa shilling, I would ask, let's consider an electronic shilling that could be used across the region. Should we be more practical? If you bring it home, Dr. Lukonga has mentioned on the use cases, having a pilot on specific areas, not necessarily geographically, but to be honest, some transactions from day one, they could be onboarded on what we call smart contracts. Again, I'm making an assumption, and I'm sure it's a safe assumption that most of us do understand what smart contract is on the blockchain. But let's talk about land distribution in the country and how land is bought and sold, and the dalalis in between, and those that have privileges to information saying, see, this project will go into certain areas, how they will go acquire only to sell, knowing that it's going to be more profitable. Now, assume if we had a land registry full on blockchain, we do have smart contract. On top of it, we say any land transaction in the country, let's say anything above 20 million for that case, should be on electronic shilling, meaning same customer journey that we do have right now when we top up on our mobile money, you would go to a specific agent, register for your wallet. It doesn't have to be complicated. It can be same as your NIN, your need identification number. And with that, you can go to any bank, deposit to your account, and you can only process land transfer using a smart contract that is backed by a transaction on e-shilling, the central bank issued electronic shilling. Bring it closer to maybe what is happening right now with the theme when you try recover from COVID-19 and the beyond. My final example, and I don't want to give lecture because Lukonga touched on almost everything. Let me paint a picture. So 1.3 trillion received from IMF. They come into the country. They need to be rapidly deployed so that they go counter whatever measures we are trying to achieve on the recovery plan. But this is cash moving from IMF to central bank. And when the payment starts flowing in from Azina, they end up in commercial banks. Down to my village where schools are being built. The visibility and traceability of those funds is lost at some certain point. As soon as it gets to contractor's hand, you wouldn't know where it goes. So if I paint a picture of e-shilling, we would say the entire 1.3 trillion will only be managed through an e-shilling. So any contractor that would love to participate, even the fundi using different methodologies that we do for procurement right now, that would like to participate in building the classroom would have to get an e-shilling digital account. So from central bank, Hazina doing the payments, commercial banks receiving it, the contractor receiving it, and the contractor spending, whether for materials, paying staff, the entire transaction could have been on central bank digital issued currency. And I won't be shocked as I submit that some of the funds that we're using on the COVID recovery measures, they're not even going to pay some of the taxes because the transaction between a fundi that is building that classroom and a hardware store is never EFTs. I submit.
Yeah. Thank you very much for that good contribution. I will come back to you later to be very specific, given the opportunities, what exactly can we do in order to benefit from them? But before we do that, talking about CBDCs, crypto assets, cryptocurrencies, we need to know what's going on. Who can tell us something that is really, experiential? Who has actually burnt their fingers in some ways or benefited from it? I would like to welcome Sandra to give us the practical experience on cryptocurrencies, blockchains, and please, spend your 5 minutes.
So good morning to all of you. I'm happy to be here. I'll share with you a bit of what I do. If I'm to share my experience, I would have to read the whole of this book. So I'm only given 5 minutes, so I'll share a bit. I'd like to repeat a bit of my history. So my name is CPA Sandra Chogo, a senior auditor, National Audit Office, the technical department. I've been into the space, blockchain and cryptocurrency since 2016, and it was Daddy's wish for me to be a medical personnel. So I worked as a medical personnel for 7 years, and I'm the author of this book, Jielimishe Kuhusu Blockchain. I wrote it in Kiswahili so that language should not be a barrier for us to see the different opportunities. It is the first blockchain book in local language in Africa. Okay, I'm again one of the resource persons for the accountants in Africa, and I talk about how the technologies of the fourth industrial revolution are changing the accounting processes. So I talk about blockchain, artificial intelligence, to mention a few. Okay, I work as an auditor. So how do I audit the Bitcoin? How do I audit the central bank digital currency? So that's what I try to do. I sit with my fellow accountants, we discuss, we exchange knowledge, and we move forward. When we look at the technologies of the fourth industrial revolution, when we look at Bitcoin, the CBDC, we are now having new knowledge, new skills, and eventually we'll have new roles for different professions. Today, I work as an accountant, but my roles are for the accountant of the third industrial revolution, and we are now in the fourth industrial revolution, so the knowledge, the skills, and the roles need to change. We are just here talking about the central bank digital currency, but we have Bitcoins, we have the altcoins, which are more than 1,200. We all need to understand all of this. What are the new internal controls in the fourth industrial revolution? I'm happy to say this, the CPAs in Tanzania, the National Board of Accountants and Auditor, since 2019, we have a syllabus for at least what is Bitcoin, what is blockchain, and what is cryptocurrency. And it is the first accounting professional body in Africa to have such syllabus. So because of my experience and my exposure, I see that the accounting is changing. And I usually ask myself, when I go to the University of Dar es Salaam, what are they studying? They are still using the same curriculum which I used about 10 years ago. So from time to time, I go to the University of Dar es Salaam, I go to CB and other colleges, just to create awareness about these technologies of the fourth industrial revolution, so that they develop interest and they start reading on their own. So I usually ask myself, how quickly are these curriculum changing? They are not changing that quickly. It could be after 5 to 10 years. So for IARA is a hot discussion in the professional. As I'm standing here, the African Congress of Accountants is going on online. So I have the timetable. So from time to time, I just put the earphones and I attend virtually the conference in Morocco. I also usually talk about women in technology, because when you talk about the fourth industrial revolution, you also talk about the future of jobs, the future of skills, and the future of employment. And it is not the future anymore, it is happening now. So does it mean we women are the ones to be affected? As you can see here, they are all men and I'm the only female. So I usually like to encourage more women to come on the top seat. So I've prepared a few slides just to show you what I've been doing since 2018. I'll take 5 minutes, don't worry. So I'm also doing 2 masters. Masters of Science, I'm doing MBA at the SAMI. I started a Masters of Science in Digital Currency at the University of Nicosia. It costs 30 million shillings and I was not able to pay that fee. So what I decided is, with the knowledge I have, let me write a book. That's why I wrote a book, and by selling it, I'm getting money, and soon I'll be going back to school. So I wrote the book and I gave it to the governor that this is my contribution to this new knowledge, because as I know, this knowledge is just new to everybody. So it's our duty to equip ourselves with these skills, then we contribute it to the regulatory body. So this is my book, and I usually write different articles in magazines. So I've written this in the ICT Commission magazine. It will soon be out. So here I was invited to speak in a PAOs, the Professional Accountants Leaders in Africa. I was invited here, it was in Morocco. Here I was invited in South Africa. I did this this was for Rwanda. So I usually also talk about the fourth industrial revolution in shaping the future of work. But as I said, it's not the future anymore, it is happening now. So we should not give ourselves hope that the future is coming. No, the future is happening now. As you can see, this was in LinkedIn. There are a lot of jobs here. We usually complain about unemployment, but what are we doing to make sure our students get these global employments? So what I do, you can see these are blockchain. The blockchain developers are needed in Morogoro, Sumbawanga, Dar es Salaam. Do the IT graduates see these jobs? They don't see them just because they are not aware of what is going on. This is an accountant job, and it requires one to have an experience in accounting for cryptocurrency. This is again another job, and this job is a remote job. So what does it mean? It means that we can have the accountant's job or any other job here in Tanzania, and then it is advertised remotely. So anybody from outside can do that job. So even our jobs are being taken just because we don't have the skills. So this is what I usually do. This was CBE. They invited me 2 days before the graduation. They wanted me to talk to the accountants who are about to graduate. So I told them about these technologies of the fourth industrial revolution and that they need to go to the internet, read about them, and equip themselves with the knowledge. I also went to the University of Dar es Salaam, and after this conference again, I'm invited again to the University of Dar es Salaam, and I'll create awareness to them again. I did this workshop in collaboration with the African Blockchain University, and these are artists, and we were showing them the different opportunities in blockchain, NFTs. So this is an NFT, and it has been designed by one of the Tanzanian, and he wanted me to give it as a present to the president. I think I'll print it and I'll give it to the governor. This is Isiaka Tanzania chapter. I was there talking about blockchain and other technologies of the fourth industrial revolution. I also participated in this, the first international conference on digital transformation, and I was talking about how the fourth industrial revolution, and its implication to education and research. So here we are talking about Bitcoin. Do we have it in the curriculum? Are the bankers equipped with this knowledge? So I also talk about women in technology. And this happened in Zanzibar a few months ago. It was a company from South Africa wanting to enter into contract with the Zanzibar government. You read it, I think they'll give you these slides. And this is the African first central bank digital currency wallet, Naira. You can see within 19 days after it was launched.
So Sandra, would you sum up, please?
Okay.
Yeah.
I think you'll get these slides. And this is my son. He usually helps me. And somebody has organized a blockchain marathon. I hope you'll all participate. Okay. Thank you.
Right. Very good. I think the purpose of this was to demonstrate that there's a lot that's going on in the market, in the communities. It appears there's an appetite, searching for knowledge, searching for experience, and so that people can optimize or maximize on an opportunity that actually emerges. So this experience has been so useful. I would like now to really zoom into the real markets. When we talk about cryptocurrencies, digital currencies, who is doing it? How big is the market? Where is the money? What are these assets that we're talking about? So I would like to welcome Engineer Kabenda, who is quite exposed, as I said. You have practiced, you have advised, you have seen, and I hope you are also doing something as a person. And I'll call on some of the individuals from the floor to tell us if they are mining anything in this area. So Kabenda, please.
Thank you very much, Mr. Chairman. I've been in this industry for past 5 years, and I'm going to share about crypto statistics, what is happening, and why CBDC has come along. Because everything we see central banks doing is because of the cryptocurrency movement. So we should understand how big cryptocurrency is and why central banks has been pushed to start CBDC. as we are speaking, cryptocurrency market cap have more than 2.6 trillion USD, and over 14,000 cryptocurrencies are available out there. And coming to Tanzania, I tried to check on the peer-to-peer wallets where crypto fiat transaction happens. There are more than 60 billion Tanzania shillings that has been traded for 5 years. And to my experience, this is too small because most of the transactions happens on OTC markets. So if somebody have one Bitcoin, which, for example, today is more than 100,050,000 Tanzania shillings, he cannot trade that on a peer-to-peer wallet. But also, according to Chainalysis, Tanzania ranks 19th out of 154 countries on global crypto adoption. And it ranks number 4 in the peer-to-peer transactions in the world, and Kenya ranks number 1 in the world. And looking at the global position, cryptocurrency is not restricted in 132 countries out of 257 countries. Why are we discussing about CBDC? What the challenges the cryptocurrency has brought to the financial sector? Blockchain technology has shown a lot of application in different sectors, but in finance, it has almost 60% of its application. So Satoshi Nakamoto is the one who established Bitcoin, and he brought the challenges on the financial systems. For example, Bitcoin transactions, if some person sends money from point A to point B, they send money with the low fees. For example, I checked on the Bitcoin blockchain because you can see it is open source. Somebody sent 1.2 million USD and he was charged 3.5 USD. So that is a challenge to the bank. But also cross-border transactions, it is very easy to send Bitcoin or cryptocurrency from one country to another. It takes only 10 minutes or up to the maximum of 1 hour, while the banking system takes 3 to 5 working days. But also, Bitcoin posed the challenge on privacy to users. People like to use Bitcoin because there is no KYC required. So, and the Bitcoin blockchain is resilient to censorship, but also it promotes peer-to-peer transactions. So there's no intermediary, and this makes the faster settlement of the transactions. But also it has high security, anchored by proof of work due to decentralization, and it is highly available. There is no one day Bitcoin went down for the past 11 years. So it is available 24/7, 365 days, and more than 10,000 nodes is available maintaining the network. So Satoshi Nakamoto, what he combined the crypto economics by incentivizing the network participants to achieve consensus and decentralization, which removed the single point of failure. I think we had Inut talking about the decentralization or using DLT on CBDC so that we can remove the single point of failure. So some people think cryptocurrency is just used as a currency. We can check the cryptocurrency taxonomy. We have almost 7 groups of cryptocurrency. One is cryptocurrencies itself. These are the currencies that was produced to serve as a medium of exchange and store of value, like Bitcoin, Bitcoin Cash, Zcash, Bitcoin, and Monero. We have also platform tokens. We have utility tokens, security tokens, natural asset tokens, NFT, which is non-fungible tokens or crypto collectibles, and we have crypto fiat currencies, which are now stable coins. And these stable coins are the one which push the central banks to go into establishing CBDC, because USD actually has promoted stable coins, because most of stable coins, they are packed with the underlying asset and currency. Now, the CBDC, the stable coins actually have resulted to DeFi. decentralized finance, which started actually last year. The decentralized finance is the financial system where people can lend, borrow, and save without any control. That means they use smart contracts on the decentralized autonomous organizations where I can go and borrow some money in the system. And these DeFi protocols actually brings a lot of challenge to the bank. Actually, I will show the link if I will have a time to show you one of the DeFi, the amount of the liquidity that has been put by the global investors. And the DeFi protocols are open source. Everybody can participate across the globe. So most of Tanzanians are participating on the DeFi, and because they are decentralized and non-custodian, no one is afraid on putting the money because there is no KYC needed, and it happens automatically. And why should we maybe regulate these activities? Because as I said, there is a lot of money moving from our country and actually building other economy, because most Tanzanians who are participating on these platforms, there are fees which are charged, and some because of ignorance, they lose the capital, and that money doesn't come back, as John said. So because Tanzania is a member of Financial Action Task Force, on 20th this year, the Financial Action Task Force actually has updated the guidance on how the different or the members of jurisdictions should regulate cryptocurrency businesses. People are afraid saying you can't control Bitcoin. When we say regulating these activities, we don't mean to regulate the protocol of Bitcoin or DeFi protocols. We mean to regulate cryptocurrency businesses, the service providers, because at the end of the day, these crypto activities are happening somewhere. And there are two types of actual transactions, crypto to crypto transactions and crypto to fiat transactions. Even if I make one Bitcoin today, which is worth of 100,000,050, let's say today, where will I spend that money? I will need cash. So there is exchanges, there's peer-to-peer wallets where these settlements happens. So the Bank of Tanzania actually can establish a sandbox licenses to allow these exchanges to follow the anti-money laundering process and safety, so that they can identify who is transacting what. For example, the IRS in USA, they are treating cryptocurrency as a property. So they apply all laws to cryptocurrencies as a property. They determine as it is it is a stocks, it's a bond, or it's real estate. So there is capital gain. Some part, for example, in 2009 when Bitcoin started, 0.003 USD could buy 1,000 BTC. Today, one Bitcoin is bought by, you use almost 58,000 USD. So if somebody had those Bitcoin area when it was starting, today he's a billionaire. Now tell me where that money will go. So some people are investing in cryptocurrency, they're gaining a lot of profits, and they can't withdraw this money. They are taking the money outside the country, and at the end of the day, our economy, it gets actually hurt. So in my view, because of these benefits that brought by Bitcoin blockchain, so many people are rushing to use Bitcoin because of those advantages said. And when we say cryptocurrency, we don't mean the currency as a currency. Blockchain technology using smart contracts through platform tokens, there are so many actually applications are built across the blockchain technology. For example, I know one of the project was established by a Tanzanian. He wanted to incentivize research participants, but by doing so, he was pushed to use blockchain technology. But when the circular actually issued, the BOT issued the warnings, they had to stop that. So the innovations gets stagnated when we view cryptocurrencies just as a currency, because most of the application in dApps, they use crypto tokens.
So, engineer, let me stop there.
Yes.
I'll come back to you next to say what exactly should we be doing
Thank
in order
you.
to take advantage of that.
Thank you.
So I think you will all appreciate that this area has got quite extensive activity. We hear the volumes of money that go around these digital currencies. Just on the number of instruments, we call them crypto, currencies or assets, over 14,000, exchanges, over 400, money flows, over $2.6 trillion. We have heard the Tanzanian context. So this is not something that we can ignore. Definitely it warrants some attention. That gives us the reason to think about the future of not only of our money, but also the future of the economy, the future of the society. Because in the end, someone has to claim control, ownership, value out of what's going on. Now, we have heard from Inutu, as well as Engineer Kabenda, and based on the map that Inutu showed us, it appears as there's a lot of action, even with the regulators around this area. And this is because there are major questions, public policy issues that need to be answered or addressed, because the money story influences nearly every aspect of life, not only in Tanzania, but around the globe. So for this reason, I think we have to hear more about the public policy issues, regulatory aspects that we need to consider or we need to be aware of. And based on Inutu's presentation as well, she already gave us a proxy of the enablers. And I think at some point, I would like someone to comment, maybe from the central bank, in terms of how prepared are we, given the requirements for those enablers as we hear from Inutu. Let me welcome Dr. Mwasaga to give us the public policy regulatory perspective with respect to central bank digital currencies, but any other sphere that you can contribute. So Doctor, the floor is yours.
Thank you very much for this opportunity. As I've been introduced, my name is Nkundwe Moses Mwasaga. I've been in this area since 2013, advising Commonwealth on that, and my specialization is supercomputer. It connects with this discussion we have now in the area of mining. I would like to talk a bit from statistics that I've got from the Wall Street Journal of 12th of November, where the interviewed the head of the biggest crypto currency exchange of the world about the status of how things are. And he explained that if we calculate the transaction that he's processing in a day and compared with general transaction that they are processed in Visa and the other things, he said they constitute only 2% of all the transactions. And another question that was asked, that how can you ensure that you capture a big part of 98% that is not covered by crypto? He clearly said there must be regulation. For them to be able to achieve numbers which are required, like you have heard about 2.6 trillion US dollars, that is what constitutes 2%. 98% are not captured. And them to be able to do that, there must be regulations. He stressed that. And the intervention for that is, one of the intervention is Cbdc. This is a very good innovation that central bank have done because that's where the world is going. And I like just to give just a brief history of how things have been changing since internet started in 1990s. Many things have changed, but they've been changing gradually, right? The first change was an email. It affected the postal policy, postal sector. Another is we were able to call through internet. Telecommunication sector was affected so much. And now there's this innovation in the financial parts. We expect, if things are not going to be handled carefully, we expect to get disruptions. But this intervention of Cbdc, it ensures innovation, and innovation is always good in any sector. Now, what motivates many central banks to start to research and look up in this direction, basically there are 4 factors. And the factor of the Bitcoin, the crypto exchange, the stable coins, like the way Itun have explained, innovation from companies, and the direction that 2 major countries that they are taking. One is China, and another one is United States. These 2 countries has made other countries start to look at it because there are other political factors which has to be taken into consideration, especially when these 2 countries, they will launch their digital currency and they control the transaction all over the world. Now, looking at our country, looking at the landscape of our country, there are a number of acts which are already there that they need just little tweaking to enable CBDC to function properly. And I'll just mention some of them. The first one is National Payment System Act. I've looked at it thoroughly. It talks about e-money. So when this thing will be rolled, it's a matter of changing the definition and everything will work fine. Another act is Intransaction Act, especially para 26(1), which has defined that any contract that 2 parties will enter, either, I'm paraphrasing, I'm not quoting as it is, between a transaction system and a human being, or between transaction and transaction. If it goes to a court of law, it's supposed to be taken as a contract. Now that definition defines smart contracts. So it looks like those people who designed this, they were ahead of time. So in the case of that, it is settled. There is a Contract Act of Tanzania, which needs some few tweaking for it to be able to safeguard that. We have Cybercrime Act, which cover everything, anything that abnormal that will happen in this space. The only one act which has not been enacted yet, but I know that it's in the process, is Data Protection Law. Because this has to do with the issue of cross-border and other things of privacy and different things that are supposed to be covered. Now, Itun have explained very, very well about the enablers. Now, the enablers that we have in our countries are, since crypto or central bank digital currencies, they have 2 options of a way on how it can be implemented. It can be implemented using blockchain, as the way you have heard from our colleague, or it can be implemented using other technology that we, at this time, we have. So if we choose blockchain, they have one inherent challenge. And that challenge is capacity to process all the transactions. And this is a technological factor. It's not a monetary factor. It is capacity to have infrastructures that they can process all the transactions. Now, based on that point, there are a number of policies that they need to be looked at. One, energy policy of our country, because transactions that they use blockchain, they are energy hungry. They are energy hungry because of one factor. Blockchain works in this way that all transaction has to be verified by other parties which are involved in the blockchain. It's not centralized, it's decentralized. So energy policy has to be looked at. These are technologies which are running over the internet. So because of that, we need to look at a broadband policy of our country, because we don't expect to launch an instrument that will exclude some of the people who are not reached by internet. So that has to be looked at very clearly. There is an issue of ICT policy. Has to be implemented. All the measures that are taken care of there, they have to be implemented also. Also, we talk about telecom policy. It has to be looked at. I was very fascinated by the presentation of some of our colleagues yesterday, especially from Vodacom and others. they took advantage of that. It is easy to launch digital currency by central bank, but if internet penetration is lower, it means some of the people will be excluded. Then there is a technological risk, which has to be taken care of. And the question that we need to ask ourselves is, like the way Mr. Sausi said yesterday, very, very clearly, that whenever we plan for such a kind of interventions, we have to look at human resource that we have. We need to maintain our sovereignty. And one aspect of sovereignty is to have your experts, that they are very good into this and they know all aspects that is needed, just like the way we heard from Sandra and the other colleagues that they've talked in here. Now, I've explained all of these things. If I'm asked what has to be done, the answer is digitalization in the financial sector. So far, that's my contribution that I have.
So thank you very much. I think he's given us some insights on what we already have. And for me, I think this conversation started a long way back. But having said that, and we have heard a lot about cross-border, markets. We have heard about the global perspectives. I think we need to listen to another person who will give us a practical experience of what a central bank is actually doing right now. We have Tim Marcella. I hope he's online. Tim is from the Reserve Bank of South Africa. He heads the national payment system in the Reserve Bank of South Africa. He has got vast experience in this space, spanning over 27 years. And he chairs the payment system subcommittee of the Southern African Development Community Committee of Central Bank Governors, and represents the bank on both Bank for International Settlement, BIS Committee on Payments and Market Infrastructures, and the Continuous Linked Settlement Oversight Committee, chaired by the Federal Bank of Reserve South of New York. So Tim, please tell us more about the South African experience. What exactly are you doing with respect to the digital currency? Is the Reserve Bank of South Africa thinking of issuing a currency in the form that you are talking about? And what is this that you think we should learn from South Africa that is can be beneficial to Tanzania and Africa in general? So Tim, if you're online, please check.
Thanks. Good morning. I've been struggling to unmute myself, but I appreciate this opportunity to join the conference and the esteemed audience. Indeed, it would have been a pleasure if I would have been able to travel to join you in Dodoma, Tanzania. Unfortunately, I still am affected by the travel restrictions, and I'm just joining online. This is due to COVID, but I think COVID is imposing digital on us, and the topic of today is focused on digital currencies. Now, at the outset, one should mention that the consumer needs are evolving, and we need to adapt the offerings to ensure that we continue to meet current needs, consumer needs, as well as those that are anticipated. And thus, the developments that we see around us that looks at leveraging technological developments such as Bitcoin, as well as adapting our offerings. Now, in the payment system space, I guess we would agree that most of the key issues we're dealing with is the issues of cost of the services, the speed at which transactions can be concluded, which speed currently is real time. The consumers would like everything done in real time. And thirdly, access to services, that is access to these payment services by the consumers of the payment system offerings. And lastly, the issue of transparency. And in terms of transparency, what we're looking at there is the transparency of when I am back on a transaction. I need to know all the information around it relating to cost, how fast it will be concluded, and all that goes with it. And thus, if we meet these four key pillars of cost, speed, access, and transparency, we would be on a winning path in terms of the services that we are providing. Now, coming to the topic of today, looking at CBDC, one would have to say, for instance, start off at a point of most of the objectives of these programs that we see around us. Some of them, they are exploring the feasibility of the issuance of these CBDCs, and in terms of ensuring that they take proactive stances that would ensure that we are better positioned to address the decline in notes and coins in areas where they are actually happening. Secondly, we look at the threat of unregulated private sector firms exploring with the currency offerings. And thus, as my colleagues mentioned earlier on, the concept of stabilization mechanisms came with stable coins, and thus central banks responded by saying that they could also offer central bank issued digital currencies that would maybe be better positioned in terms of ensuring that we enable transaction. Thirdly, it's at the look of ensuring that we adapt payment system offerings so that we maintain efficiency and resilience of the system. And this is where the various mechanisms are considered. And my colleagues were talking about decentralized business models. And indeed, when we look at this, we should say we're not necessarily looking at technology, but we look at evolving business models that aim to serve the transacting needs of the future and the ones for today. And thus, the blockchain offering with smart contracts that goes with it offers something that is quite key in terms of maintaining this. But of course, we must recognize that centralized mechanisms could also have a place where they could also position the offering in such a way that the risks are managed and the benefits are leveraged in terms of what we looking at in terms of reforms. Now, my colleagues indicated the key considerations. I'm just going to walk through them quite quickly, the issues of efficiency, reducing cost, and the cross-border element of ensuring that we reduce frictions in these offerings. But in all this, from a policy perspective, we look at the impact that we see from a risk perspective, as well as the leveraging of the offering from a benefit perspectives. Now, in South Africa, and maybe let me just touch on the continent, we are aware that there's various initiatives that have been initiated on the continent relating to CBDC specifically. I think the most recent one being Nigeria is the one where the e-Naira, we understand, has gone live. There have been others that were said to be advanced in Senegal, the ECFA, as well as e-Dina in Tunisia, but they were met with denials that there's only exploration, but not launching of the CBDC as Bahamas and Nigeria has done. But now South Africa, and aligned with Ghana, has launched a feasibility study to ensure that we look at this subject. And we're saying it's a feasibility because we believe we should consider issuance, but we should first look at the desirability and the feasibility of that happening. And in this journey, we're looking at policy impact, and my colleagues mentioned from monetary policy, financial stability, and all the other aspects that one would imagine a central bank would be concerned about, and see whether we could go for the offering. And in our feasibility study, we have chosen to contract 2 service providers, one being Algorand and the other being MasterCard. And the reason why we chose to contract the 2 is because in the exploration, we're looking at a token-based CBDC or an account-based CBDC. And we have offered each party the other so that we explore both at the same time. And when we come at the end, we would have the benefits and the pros and cons of the token-based and the pros and cons of the account-based. But to my mind, when we talk account-based, one could ask questions and say, what is the issue with the current mechanisms that are offering transacting that a CBDC would offer that these mechanisms do not offer? And in this instance, one would know that in the offerings of payment services, there's the issues of consumer protection, data issues, and the issue that my colleagues mentioned relating to money laundering, anonymity, permission versus unpermissioned ledgers in case we adopt the distributed ledger technology. And all these aspects we need to test in coming to a conclusion whether it is desirable for us to go for a CBDC or it is indeed feasible as well to do this. And in this respect, I think my colleagues covered on some of the things that I've just mentioned just briefly. We're talking to design considerations for these offerings. And here we look at the potential as well as the preferred designs and deployment options that we could adopt. The approaches to technology, we're saying we look at the business model, and technology is the easy part that could underpin that. And then we look at if we have to proceed with the issuance, what are the possible transitional arrangements? What are the security implications? And then when we look at the policy impact, we look at why we should do this and how does it link with our mandate? And how does the design options impact on policy objectives, as we mentioned, to financial stability, monetary policy, fiscal policy, financial market structure, and all these other aspects. So those are key in what we're looking at. And then we look at the intended and unintended consequences. What do we intend to achieve? And what could we have not thought of that could actually impact us, relating to potential economic and financial system impacts, the benefits and risks, as I indicated. And all these key considerations are actually going to be leading to what the outcome of the current feasibility study will yield. We hope to conclude this in March next year and have a stance as to whether we're proceeding and what are the learnings. Looking at the legal and regulatory regime, and as mentioned, we look at the impact on the current legislation. Is it enabling? Are there other things that we need to do? The regulatory regime that is required around that, and the participation rules and how the criteria will be set up to enable this. Then we're looking at ongoing monitoring, and we participate in research at a global level as we undertake our own work. And we look at the learnings of what other parties are doing, and we incorporate all these learnings into the process that would lead into what would actually happen. At the very end, we may decide on taking this into an innovation lab so that we look at viable use cases that could be tested, and then we look at the designs that we'll be testing initially and how we will actually enrich the findings to get across. And in this whole scenario, we're looking at this CBDC initiative being complementary to cash, and we're looking at ensuring that the CBDC offering, if we have to go for it, should be complementary as well as interoperable with current payment system mechanism. We see this as a very exciting journey, and in the quest of ensuring that we make a difference, we say whatever comes at the end should be something that possibly the current offerings cannot actually fulfill, so that at the end of the day, we should have solved for problems that otherwise we wouldn't have resolved with the current offerings. And in this journey, we quite excited. I don't know whether colleagues know, in South Africa, we have a body that we call the Intergovernmental FinTech Work Group, which is close to this process. Is consisting of the Ministry of Finance of the National Treasury, the Central Bank, the country's revenue office, the tax collector, the Financial Sector Conduct Authority, the National Credit Regulator, and the Financial Intelligence Center, or the Anti-Money Laundering Authority. So all these parties are collaborating. Although the feasibility studies run by the Central Bank, we work within the ambit of the Intergovernmental FinTech Work Group. My colleagues indicated that this can be an aspect that is run by only one entity of the state, but it's a collaborative effort. But of course, the financial sector and the banking sector is key to this. And mainly the banks are closed, but also the FinTech entities that could stand to ensure that when leveraged, if we decide to issue a CBDC, it does have the appropriate impact that would actually have the intended outcomes that we're looking at. And I'm excited to say that when we release this report of the findings in March next year, we'll be announcing what our next steps are, essentially in terms of whether we're going to implement this in the live environment to realize the benefits. I think I'll pause at this point and be standing ready to engage together with my colleagues on any questions that the audience in the conference may raise. Thanks very much.
Thank you very much, Marcela, for this exciting experience. I think that's a good account, and the reason to see that a lot of central banks around the world are actually busy doing something in this area. As of today, we are told that over 80% of the central banks in the world, up actually from 70%, are engaging in some work, whether it's research or piloting, into these areas of digital currencies. And I think I'm also thrilled to hear from the Reserve Bank of South Africa that you've gone through this route to educate yourself, to inform yourself of what choices you have and how you need to actually, capitalize on them. And I've heard from you some of the good, what I would believe they are good approaches to coming up to a final conclusion on what you do next as a Reserve Bank. So I've heard things like research, sandboxing, innovations, which gives you the space to learn and decide the options that you want, whether you want an asset-based or tokenizing, or you want limiting or not limiting, or who participates, rules, and all those. We have talked about opportunities, we have had experiences, we have had, public policy issues, regulatory legislation arrangements. We have not heard from the money movers yet. So what are the implications to the financial sector? We have not had banks leading on these areas, although I believe there are, because from the mobile money story in Tanzania, banks have been quite engaging, with telcos as well. And I would like to prepare people to come up with questions. If you can post them online, that's fine. And I would like to say that when we talk about financial sector implications, I would like to call on a banker to give us that perspective. What should we care? What should we really be concerned? Anything that you want to share with us about CBDCs with financial sector. So Mr. Ligarama, please take the floor.
All right. Good morning, team. Thank you, Chair. Through the history and generation which we undergo from the traditional barter trade to the fiat money, and then we came with the digital now, which we are facing right now. There are some implication in the financial institution or financial sector, whereby the most critical, they think that where are we going to do with the deposit, for instance, because that is our culture, that is our way we use to pioneer that if I have a liquidity in terms of deposit, I'm doing better in the market, I'm doing better in the economy. But since these stable coins have come around, and we see the potential and the significance of these stable coins, which were also affect at some point with our customer or ourselves. We see the magnitude of stable coins, the growth of them, and how they impair or they affect the financial institution in terms of value and in terms of the economies of scale and the likely. So the question which we, as a financial, we are asking that despite that the future starts today and the economies go digitally, and we can't avoid. We can't say that no, we resist. We are not going to join to the rest of the digital currency. Rather, we are seeing how we can accommodate the move, and the process of the movement of central banks across the world. It is a result of stable coin, because as we understand that you cannot measure, you cannot even identify who is holding those coins, for instance. And because there is no regulation to monitor and supervising or controlling the cryptocurrencies, therefore the central bank decided now to be part of this generation, digital generation. How? Now they come with this Cbdc just to support and to control that movement. If they cannot be part of the private stable coins, then they should initiate themselves to issue a digital currency which they will control and manage the movement of the digital currency. So on that era, again, since we are as a commercial bank, for instance, aggregated in inflation instead of price. So the digital currency will be driven as a price level, a price indication instead of inflation. So we need also to have a look on that. And as a bank, again, we also fear that we will look at the monetary policy, as we know that the policy now is supporting the cash. How are we going now also to see a potential on why, how we change our policy as well? It's not necessary to change, perhaps to have hybrid. Maybe we'll have both policies, digital policy, digital currency policy, and a cash-based policy, which we have right now. There is an advantage for central bank to go through this digital currency. One, is safety. We understand as a bank that the first thing in a bank financial is safety of the liability of our customer, for instance, finality of the product, liquidity, and integrity. All these benefits are available in a digital currency because they are using the technology which are more advanced, more robust, and as well, it is supporting all these features of integrity and safety of the transaction. Apart from that, since we are financial services, we are promoting and aggregating the payment. Currently, we have a number of series. If I'm doing a transaction, maybe from Tanzania to either abroad, I have to pass through a certain middleman. So through this can be a direct transaction, which will be fast track the transaction and improve efficiency in terms of transaction. But why is CBDC? Customer, they are asking themselves, why is CBDC? Customer, they are looking for CBDC just because of they want to see the value of privacy. If I have my digital currency, I have a privacy with my digital currency. Yeah. Security. Broad usability means that I can do more through the digital currency instead of either purchasing, but I can invest. I can do other related businesses across the world, not necessarily to be within the country. So those are questions which customers are asking themselves, and they are feeling that perhaps digital currency can help, and instead of going to the private digital currency such as Bitcoin and whatever, maybe central bank can own this, then can give us something, or customer can be very comfortable rather than going to these other stable coins. As I said, the banks are worried about the implication of deposit because of the economy which we are driven right now is cash deposit, but we are seeing that the possibility of commercial bank also to be onboarded and just to eliminate the disimplementation risk which can appear, it can appear during the process of onboarding the banks in a digital currency. There is other merits on a digital currency. We understand that despite the central bank can process this, can issue this digital currency, but as well we assume that the rate which will be imposed in digital currency can be lower compared to the current rate which they are offering to the commercial bank. Hence, the move from a traditional currency to the digital currency will be higher than the normal one. So this also is a part of a positive implication on a digital currency. Having said that, maybe we come back on the conclusion that on how now we should take it up, because the future is already started. The future is not yet started, but it is already started, and we have to be on board. Thank you.
Thank you, Ligarama, for that contribution. I think the whole essence of this conversation talks about the money flows and how it changes the way our intermediaries actually work in terms of really mobilizing and allocating those resources. So how will this be different when it comes to lending? How will it be different when it comes to deposit mobilization? And you are talking to banks, but then we have other financial intermediaries like pension funds, like insurance guys. How will that be different, and how would it look like? So I think the question of monetary policy in general is just part of the public policy issues that need to be discussed. Linking to yesterday's conversation on digitalization, we heard around things around taxation, competition policy. They are all issues that we'll have to grapple with. So to the audience, you have heard enough to this point. We would like to spend like 10 minutes or so, welcome questions, remarks, contributions, because this area is quite exciting. So I would like to open the floor for questions, recommendations, please. We have 10 minutes, then we can come to close. In the meantime, all the panelists, including Inutu, if you're still around, and team, give us one thing that we should do as a call to action or takeaway for Tanzania. The floor is open for questions now. So I would like to see mics around. I see the first hand here in front to my right. Okay, whoever has a mic, please.
Habari za asubuhi. Mimi nina maswali mawili. One of the presenter, I forgot the name, he mentioned about different rules and regulation and act, but he didn't mention anything about the shortcoming of our Anti-Money Laundering Act related to cryptocurrency. And one of the presenter also, explained that one of the characteristics of cryptocurrency is anonymity. So how can we prevent the flow of illicit funds from one jurisdiction to another with respect to cryptocurrency? Thank you.
All right. So please be brief. Just ask the question straightforward. Don't give explanation in the interest of time. Next, please. In the meantime, panelists, please prepare for those responses. I see so many hands. Go ahead, please.
Good morning. My name is Phyllis. Thank you so much for this presentation. I think it's adding a lot of value to us. I would like to read the last speaker from SARP. And really, our approach is one of the best, particularly the multi-institution up to this, because cryptocurrencies have two models. There is the digital currency. We know that our citizens are using. I don't know if my mic is okay.
We can't hear you very well. We need to get the question. Or
Thank
remark.
you.
Yeah.
So there are two models. Mine is a comment. There are two models. There's the CBDC, and then there is digital currencies and how our consumers are using them. And what we have seen globally is most of the digital currencies are being used as assets, speculative assets, you know, Bitcoins, Ethereum, and the volatility around this. And what regulators have done is to regulate them as assets. And these ones are typically maybe regulated by capital markets, and they regulate the platforms where these things are being traded and the players. And that, you know, helps in the consumer protection part. So it's important that there is a multi-faceted approach to this, not one regulator, but a group of regulators. And that's what South Africa has done. And really studying the use cases that make sense for our consumers. For Visa, we are approaching both user cases, looking at the digital currencies, the assets, and what we can do in terms of settlement of payments. And then also working with central banks on the feasibility and a lot of the research that's needed to develop the right approach to CBDCs. Let me just give the use case that we are piloting in the US with, and our approach is using the stable coin, because at least it is pegged against a fiat currency to stabilize them. So the stable coins, and we are working with Anchorage. Anchorage is a digital bank that is licensed in the US, and Crypto.com, which is also a licensed market platform for trading of these digital currencies. And what Visa is trying to do is to develop the settlement, back-end settlement for these stablecoin transactions in the market, which I think is also critical, because when you look at this, there is the aspect of what consumers are using these digital currencies for, and can we develop the rails to enable those transactions there? And then secondly,
would you summarize, please?
Thank you. I'm just finishing the last point, is the CBDC angle and working with the central banks. And we would want to work with the central bank here to contribute to that research, as well as in South Africa. Thank you.
Thank you. So that was a recommendation. That's good. So next, please.
Yes, I'm here.
I'd like to take two more questions, then I open
Okay, sorry, Chair, we also have some of the online questions. So you can take maybe the questions here and then I'll read out some of the online questions
Thank
for
you.
online
All right.
participants.
All right.
Go ahead, please.
Yes, I'm here. My name is Milinga. I'm from Fademo Financial Solution Company Limited. We train people here in Dodoma on blockchain. I have one question. My question goes to BOT. Nataka kuuliza BOT kwa Kiswahili. Sababu kubwa ambayo inawafanya BOT wazuie vijana kufanya forex trading online na cryptocurrency trading online, kama tulivyosikia jana governor akisema kwamba wanatoa tahadhari. Sababu kubwa ni zipi? Ni kwa sababu Watanzania hawajajua kutrade? Ni kwa sababu Watanzania hawajajua hii sector? Or what is the reasons behind the BOT warning, forbidding, as if it is something illegal in the world? Why it is a global issue? Naomba kujua sababu za BOT kuzuia Watanzania kutrade forex na cryptocurrency.
Chair, with your permission, this is a very interesting topic and we have a lot of questions. So I think we should not limit. So let's take more questions and ensure we're responding. Thank you.
Thank you. Thank you. Next question.
My name is Edward from Therapy. So my question is more of what your opinion is, right? So all the panelists. With the introduction of the central bank digital currency, what do you think would be the future of mobile money?
Thank you. Next.
Yes, it's here. Well, thank you for the nice presentation. We have heard a very good insight from our contributors. My name is Dr. Elias Kasonso from Blockchain and Cryptocurrency Ventures Limited. It's a registered company to provide public education on blockchain and cryptocurrency in Tanzania. And you can access some of our resources at www.bcv.co.tz. My contribution is straight on regulations and the risks. About regulations, we know the rule of the game in the world, that technological advancement always starts, then regulations follows. So it is innovate, then regulate. Innovate, regulate. We cannot say that set regulations and then innovate. That could not be possible. And if that was it, then we would still be in the early Stone Age. So what I want to commend to the regulators or central banks of our country is to allow this technology to proliferate or to thrive and set regulations that will allow guys and the young people to make ventures in this area. I have an advice from the World Economic Forum, which is an international body. It advises on the 4 approaches of setting up regulation. The first one is the wait and see. This says that as a country, you can allow the technology or this blockchain technology to make operation in the country while observing the risks that can affect the consumers. This is one of the methods adopted by Brazil already, that the technology is taking a very big step in there. The second approach is public-private partnership. We have discussed a lot since yesterday on the issue of digitalization, how the private sector can play part. It states that countries can set regulations, but working closely with the private sector. Singapore has taken this approach. The third approach is comprehensive regulatory approach. The comprehensive regulatory approach is one which has been taken by EU.
Would you ask the question, please?
Yeah, my question now is, when can the BOT executive inform us when is the plan going to be laid out about setting the regulations and to allow this technology to take place in our country and benefit our economy? Thank you.
Thank you. Next, please.
We need hands from this side, please. Okay, go ahead.
Thank you. My name is Tobias Swai from the University of Dar es Salaam Business School. Straight to Sandra to congratulate her for what she does, but also to respond to the fact that university, what she said that university curriculum is only on digital currency. I'm the instructor for a course known as Financial Institutions and Markets, and we do train students on digital currency. Also, Also, I am supervising a student who is doing his dissertation on cryptocurrency. But last year, we published in our Business Management Review journal a paper on digital currency by our well-known professors, Professor Mark Mandosia and the late Professor Matthew Luhanga. This paper is online. You can take time to read, and welcome to the University of Dar es Salaam, Department of Finance. You will find the right information for your accounts. Thank you very much.
Thank you very much.
Chair, I would now like to read the questions of those who posted online. And you can decide who amongst your panelists can actually take on some of these questions. So from Arnold Mjema, is asking how do people make money on these crypto assets? And then we have a question again from Mr. Mjema saying, what is the role of the central bank on tokenization of different government-related projects? What is the role of the central bank on the tokenization of different government-related projects? And then Jovita Kalokola is saying almost all central banks are discouraging cryptocurrency, but encouraging shift to digital currency. Why should our schools and colleges develop a syllabus on cryptos? I hope you've captured panelists, right? I'm continuing.
Yes, please.
And then we have from Juma Chacha asking, as Tanzanian youth, how can we harness this technology and use it to employ ourselves instead of depending on government employment? Right. And then we have another question from Jovita as well. To what extent are we sure that each digital currency from each country will be accepted in the trading platforms, such as everyone holding it so that he or she can trade without denomination of other currencies? Like what is happening right now, that Bitcoin is dominating other cryptos. I hope you've captured it. And we're continuing with questions, but we have a member of parliament on the other side that we would like to hear from. Over to you, Sioforo. There's a hand there from a member of parliament.
Karibu sana, and that will be the last one so that we can give the panelists the opportunity to respond.
Good morning, ladies and gentlemen. My name is Condesta Mundi Michael Sicharwe. I'm a member of the Parliament of Tanzania coming from elected city, and I am representing Momba constituency from Songwe region. For the benefit of my people who I'm representing, my fellow Tanzanian, I'm going to speak in Swahili so that if they can come across with this clip, they can understand much as well. Maswali yangu nataka kuyaelekeza kwa Benki ya Tanzania, ambao wao ni chombo ambacho kimewekwa na serikali kwa ajili ya kutusaidia na kuregulate taasisi zote za fedha. Swali langu la kwanza, kwa nini BOT hamjataka kujifunza kwa mapana na kwa weledi mkubwa kuhusiana na blockchain technology? Swali langu la kwanza. Swali langu la pili, kama mnahisi kweli mmejifunza jambo hili na mmeona imefaa kabisa kuishauri serikali kuto kuipokea teknolojia hii, mmefanya research ya kutosha kuona kwamba hatuwezi kuimplement teknolojia hii? Kama ndivyo, mmeenda kujifunza kwa nchi zingine, mfano South Africa wanafanyaje, Kenya wanafanyaje, Zimbabwe wanafanyaje? Kwa nini wao wanatumia zile ATM za digital currency? Kwa nini vijana wengi ambao wanatoka kwenye hizo nchi wamejiajiri? Nilipofanya research mwaka 2016 na 17 kwenye nchi ya Nigeria, kipindi hicho nchi ya Nigeria ilikuwa na zibani zote kampuni ambazo zilikuwa zinajishughulisha na cryptocurrencies. Lakini hivi tunavyoongea sasa, Nigeria wameanza kuitumia teknolojia ya cryptocurrency mpaka kwa kutumia wakati mwingine local networks. Je, kwa nini hamjataka kufanya hivi? Kwa kumalizia kwa ajili ya muda, sisi kama nchi wakati mwingine tunapitia hata madeni mengi sana. Hamjui na mfahamu kwamba hizi taasisi za kifedha ambazo ziko huko kwenye nchi ya dunia wananunua blockchain kila wakati. Wananunua Bitcoin kila wakati na coin zingine. Na ndizo hizo wakati mwingine wanakuja sisi kutukopesha huku, tunajikuta sisi tunafanya kazi na kulipa hayo madeni kwa mateso. tunaonaje kama BOT na taasisi zingine za kifedha mngefanya majaribio kununua coin ndogo hata kabla hamjataka kuzileta kwa wananchi? Haziwezi kutusaidia kuona namna gani tunaweza tukapata pesa kwa ajili ya kutokana na hizi coin. Ushauri wangu kwa BOT pamoja na taasisi zote za kifedha, je, mnafikiri mtaweza kushindana na teknolojia hii? Kama mnahisi ndio, mbona hata internet yenyewe imetushinda? Tunajaribu kukimbizana na spidi ya internet ilivyo kwa ajili ya kuendelea kuweka vitu mbalimbali. Hivyo tunaomba taasisi zote za kifedha, especially BOT, tunaomba muone namna gani mnaweza mkajifunza teknolojia hii ili tuweze kuwasaidia vijana wengi wa Kitanzania, na kwa sababu kuna upotevu mwingi sana wa pesa unatokea na tunaamini hamjui, na wakati mwingine hata utakatishaji wa pesa unatokea. Mfano nikichukulia kama Remitano, ni pesa ngapi ambazo watu wanauza coin mbalimbali na wanalipa kwa njia ya M-Pesa na Tigo Pesa? BOT, hivi vitu mmeshajua mna regulate namna gani? Kodi yetu tunaipataje? Na hela ambazo zinatoka Watanzania wananua Bitcoin zinaenda nje, mmeweza kuzifuatilia? Baada ya kusema hayo, nawashukuru sana.
Asante sana. Swali la mwisho kwa upendeleo, nimeambiwa la mwisho. So baba hapa karibu, naomba.
Hello. I'm Willie Martin.
Thank you. Thank
Just
you.
go ahead.
Thank you very much. My name is Hashim Mkachande from State University of Zanzibar. My question was about this is something that is very useful and can be beneficial for our country, but how the BOT make awareness and education to our parliaments, because this thing need about something about regulations, policies, acts. So, and also we have our regulation in country and policies. So how are we lobbying or educate or create awareness to our politicians through the parliaments, and to see how what are the gaps in our policy in order to have managed to use this digital currency? Another one about the conducive environments, because now we are talking about the digital currency, but the digital currency it require amount of the interventions like accessibility, as what we talk about in networking infrastructure and others, and also to ensure security for those who are using, and also cost of transaction on this digital currency. So how are we taking consideration of this area? Thank you.
Thank you very much. So we have a mountain load of questions. And I'm sure we may not have enough blocks here to address every question. We'll try. The panelists around, the resource persons around, we will address some of them during other networking activities. In the meantime, let me give each panelist, 1 minute to respond to the questions, and then I will end up with the permission, Governor. Is there anybody from the Bank of Tanzania who would like to respond to some of the questions? I'll just open that when everybody finishes. After these responses, we will come to the closing. So the floor is yours. Panelists, pick any question that you want to respond for now.
Thank you very much. I'll try to answer few questions. I'll start with there is someone who asked about future of mobile money based on this planned adoption of the digital currency. One thing that I want to explain is this mobile money, they are called mobile money, but in actual fact, they are not money. They are just payment gateways. So what they're supposed to do is to just innovate. They have to innovate to become crypto exchange provider, right? Or digital currency processing provider. That's the thing. But they are called money, but they didn't reach level where they are actually money. They were a remittance system, and then they were providing banking services, but they were short of being really cash. So I don't think if there will be any disruption in that landscape, everything will be fine. With a cautionary measure that we held yesterday, like I said, I'm researching about this for a long time. I think that stand is the best stand. And the stand was just to caution. If someone is doing it, they're doing it at their own risk. But the good thing with this is Bitcoins were created to disrupt the financial industry. That's what the intention. So the measure of creating central bank digital currency is a good innovation from the side of central bank to make sure that this landscape can be played in a rules which has been tested for a long time. So I think this is the best thing, in my opinion, and it's a good innovation into that. So these are two responses to me.
Yeah.
Thank you. Maybe I could suggest we distribute question among the panelists, that way we don't repeat the same questions. But just to top it up, on the future of mobile money with CBDC, I think one of the challenges that we're having communicating, educating ourselves about CBDC is we assume it's going to replace fiat or any other digital means that we do have. CBDC, if it comes, it's only to complement what's already existing. So I'll give you an example, if that's the way we want to bring the conversation to. Look at the cycle management, cash in, cash out management of mobile money ecosystem. How many times do you go to Wakala and they'll tell you they're out of float? You can't cash in, you can't cash out. Assume CBDC comes in and the float is centrally managed through CBDC. It wouldn't matter which MMO, mobile money operator, you're subscribed to. If they're willing to advance the exchange with CBDC, the cash in, cash out will not be a problem anymore. And I'm happy to walk you through the study that we've done in that regard. And that can cut across mobile money, but also urgent banking. Another example to complement CBDC enhancement of mobile money is on settlement. It's ridiculous that to date we still trouble the central bank to handle settlements between licensed operators. With CBDC, auto reconciliation, settlement issues with smart contract will no longer be a problem. I invite you to continue having this conversation because there's a lot more benefits with these two systems coming together. Unfortunately, the time is short here.
Good. Next.
Yeah, I would like to comment about the self-employment question. Once you understand this technology, you will see the different opportunities. An example is we are now having new careers that never existed globally. I showed you about the NFTs. So once you understand this technology, you will see the different opportunities. That's why I've been going around creating awareness and the like. And I would like to collaborate with you and see how we can work together. Thank you.
Engineer? Okay, someone asked how people makes money and how crypto trading is done because Bitcoin is a giant. What I can say, cryptocurrency is trying to mimic the financial sector. So everything happening to the financial sector is what is happening to crypto. So there is exchange rates between one crypto to one crypto, but also Bitcoin serve as a vehicle currency like USD. So you can invest in different coins but at the end of the day, you change, you apply exchange rate back to the BTC and you withdraw anywhere. So people makes money through mining activity. I can't explain how it's done, by investing in DeFi, staking, lending, borrowing, and most of all is hodl. Hodl means you buy the coins while they are at low price. You hold maybe 2 years or 1 year. Some people are making millions USD on doing that. But also other people are trading like Forex trade, online Forex trading. So by using a margin trading. Thank you.
Thank you. Likalama, please.
Yes, additional to that, I've seen someone ask a question between the cryptocurrency and the BDC. The difference is, I mean, there is a difference between these two terminology. The digital currency or DBDC is aimed on what we have right now, for instance, in a fiat currency, right? So instead of giving out the physical notes, now is going to be given out the digital token, right? So this is the difference between a cryptocurrency. And since the CBDC will be controlled by central bank, so the liability it is within the central bank as compared to the cryptocurrency, where it's generated by the decentralized ledger, while the CBDC is generated by the centralized ledger. Yes, thank you.
Thank you. And Tim Marcella from South Africa, would like to hear your contributions on any of the questions that you'd like to pick. So Tim, please.
Thanks very much. I'll touch on 3, and I'll take advantage of your question of saying, what could I leave my fellow Tanzanians with? So the first one is relating to regulation. I think the question to my phrasing, I would say regulation follow innovation. I think the question was about that. And in this respect, my contribution, I agree with that. And I would say that the sandbox concept is essentially trying to address that. To say, as innovation happens, the regulators should learn as we are in a sandbox environment, and we should develop regulation appropriately rather than inhibiting innovation. And secondly, in the South African context, I'll just mention that we have something that is called the Innovation Hub. And in the Innovation Hub, it's got 3 elements. The first one is the Regulatory Guidance Unit. It's looking at guiding the innovation based on current regulatory framework. And then it's looking at regulatory sandbox as well as the innovation accelerator. On the second question, it was relating to the role of central banks in tokenization in government. What I would share just as an experience is that in South Africa, we are looking at our digitization strategy. And in this journey, we have our presidency also as a key stakeholder, because here we're looking at digital identity, digitization in health, digitization in finance. And in this respect, this question of tokenization in government, we're looking at how we can remove frictions in some of the government transacting arrangements. So a collaborative arrangement with the government and the financial sector should help address the question relating to tokenization in government. The last thing I want to leave the colleagues about relating to CBDC is that there's a project called Project Danba, coordinated by the BIS Innovation Hub Singapore. In this project, we're looking at creating a platform for establishment of central bank issued currencies on a platform that has been implemented that would ensure exchange of CBDCs across jurisdictions. South Africa, Australia, Malaysia, and Singapore are part of this project, and colleagues can Google Project Danba to find out the further information about this. And this would yield a firm position early in next year. So, Chair, to your question to Tanzania, I would say my Tanzanian colleagues could look at establishing a collaborative structure in country that would include all relevant stakeholders so that they can look at an innovation hub concept. And in this respect, then other SADC countries could hold hands with them so that we share experiences and we can advance in leveraging these technologies and ensuring that we change business models that will benefit our consumers. Thanks, Chair.
Thank you very much. I know every panelist have tried to respond to some of the questions. There is one critical question that has to be addressed, and I'd like to take it to Ligalama, back to Ligalama. And if you need any, assistance, I would like to call on the bankers that are in this room. It's with regard to people, using bank accounts to buy cryptocurrencies. So what is your view? I think Ligalama should begin, and then I'll give you, Jones, to say something that you wanted to add to complement.
And the bankers are here.
All right, thanks, Chair. Currently, we are practice the digital currency individually, and it has proved that it has some positive impact, despite that there are some few negative impacts. And the way we are going, since the economy is follow under digital era, we as a human being, we can't afford that. I mean, you can't avoid that. That movement, it is a must to go. And how now we go is a preparation which we have to undergo. And through that, I would appreciate if central bank should start to giving out the authority to the exchange. We need to have an authorized exchange agent. Since that that is our life, if I may say that, we can't avoid, and we can't run away from that. And that is reality. You may find that a number of people, they are purchasing token, but not in a way that they are, I mean, in a normal way of financial transaction or payment. So they are trying to do in a different way and get those token. But if we are in a position to progress in this era which we have currently, as a country, we must start doing something. And doing something is, let's start with the approving the exchange agent here and allow people to exchange locally. That will give us a time to understand, to learn, and see where now we can implement, or we can complement the Cbdc, which is now a way to go and we cannot avoid. So my call to the governor and the team from Central Bank, we can't avoid to leave this era. We can't avoid to hatuwezi kujitenga, hatuwezi, otherwise tutafeli kwenye financial crisis when it comes. We must migrate, but it was already too late by that time. So that is my call to the Central Bank.
Asante sana. So, there's one who wants to contribute. Thank you. Madam Mohammed.
Thank you very much. I just wanted to add a few comments, from a commercial banking point of view. And what I would like to say is, first of all, like all other territories, we are roughly in the same position. This is a new space. It's a space that is still developing, fairly quickly. And if you look at the players that are in this whole crypto space, they vary from people who are approved, regulated in different parts of the world, to a lot of new startups. So we normally use these big terms, blanket terms, but when you really go to the detail in terms of who are you dealing with, and especially when you look at it from a regulated entity point of view, where we have to follow specific regulations that are in place, I think the approach that is being adopted for Tanzania, the approach that we have seen coming from the BOT, is one that says we should not miss the opportunity. We should definitely keep our eyes open to it. And the fact that we've spent this amount of time today discussing this subject shows the support, that the BOT has for this space. But at the same time, we are in a regulated industry. We have a responsibility to our customers. This whole issue of the secret contracts, etc., how does it sit with AML regulations that we are subject to as regulated entities, etc.? So it's a complex discussion, but what I would like to say is that generally from all my colleagues in the commercial banks, there is a lot of interest, and we would like to see how we can participate, but at the same time do it in a way that is, within the regulation and within the requirements. Thank you.
Thank you very much. So, Jones, you wanted to complement something with. I think there was a question before on anonymity. Again, we have to be very careful with CBDC or any other crypto. The anonymity is not there. Matter of fact, the transparency that comes with it is way higher than any other digital payments. You're probably referring to pseudonymity, where somebody would use another name, ID, or you name it. But as far as the transaction is concerned, anonymity is zero, and there have been different schools of thought regarding this, and it's well researched and documented for your consumption. One last fact check from Mheshimiwa Mbunge. Nigeria, still the biggest battle that they do have with the youth is banning cryptocurrencies. Of course, they have tried to replace it with e-Naira, their CBDC, but crypto is a no-go, and they're tackling it from every angle. Thanks. Thank you. So I would like to welcome the Bank of Tanzania, but before we do that, I personally had a specific question to Inotu, and please Inotu use this space to pick any other question that you have heard from the audience to address. I wanted you to talk about the consumer protection issues that can be imminent with respect to digital currencies. And then, based on your understanding, a global view, practical experiences from over 25 countries, how can we start to begin to think about consumer protection issues, especially when we're talking about the low-income people, those that are really vulnerable? How can we be cognizant as we think about these developments? So the floor is yours. Once you finish, I'll bring the Bank of Tanzania to say something. Inotu, please.
Yeah. Thank you very much. Actually, that was one of the issues I was going to touch on. I think I can answer it in the context of some of the questions. There was the question on how do people make money from crypto assets. I was going to actually say that my colleagues have actually touched on how you make the money. But the other side of the coin is you could actually lose your money. And this is why the government usually discourages the people in terms of investing in the cryptos, because it is a speculative asset. It can actually even fall to zero. You have seen sometimes even with Bitcoin, once there are new regulations being introduced, you see how it falls. You've seen the impact whenever China bans in the country, you'd see it falling significantly. So depending on when you actually entered the market, you could actually lose money. And the government, the central bank as a regulator, is usually concerned about the people, especially if you really don't understand the market. The advice is usually that do not invest more than what you can lose, what you are willing to lose. So sometimes, when the prices is going up, the euphoria is that we are all thinking, oh, we'll make money. And, you take your life savings and invest, and then the next thing, the price falls and you lose your life savings. And this is where the regulators sometimes, that is why they're concerned about consumer protection. And that's why they give these warnings. Now, in terms of consumer protection, usually the central bank, they normally require disclosure but they also look at how the things are being sold to the people, because sometimes they can missell you. They give you the impression as if, you know, it's all going to be profit. And then subsequently you discover it's not that way. So that is why the central banks as regulators are usually concerned about, they give us all these warnings, and they sometimes also look and see how these products are actually marketed to the people, so that when you invest, you actually know exactly what you are getting into. I can tell you, like, I look at some of my stocks. I've had a stock which I kept for more than 17 years, and it's still making losses. So it's not always that the stocks are always the crypto assets that everybody will make money, especially with the euphoria. You might find now you jump in, you know, Bitcoin is now at 60,000, and you put in all your money. The next it's fallen to 30,000, next it's fallen to 10,000. And you don't know for how long it will come back. So that is one angle. There were some other questions like, what will be the future of e-money if CBDCs are introduced? This is one of the issues that we actually, you know, sort of like sensitize central banks to say the central bank, one, in terms of foundational principles, the CBDC should continue to coexist with other forms of private money. And one of the things that we encourage is for central banks to actually look at what is going to be the impact of the CBDC on the financial market infrastructure, on other payment systems. But there is no guarantee, because business models, sometimes they survive for some time. Look at the postal service. As soon as the internet came, nobody's no longer posting letters. It's a long time since I received a letter in the post. Everybody went email. So business models will change. They cannot be protected. There are some that are going to disappear. There are some that will survive. But the central bank has an obligation to look at the market, see what the impact is going to be, and see how they can transition so that there is no major disruption immediately. I think that addresses the issue of even why central banks discourage cryptos. And the question of why do we still have to learn about it? That's almost like saying, why do we learn about history when things have already happened? So I think those are some of the questions that I wanted to, but maybe I can also touch on my final remarks, because it's already 3 o'clock here. I'm in Washington. Absolutely. So in terms of my last words, my parting words on the issue of CBDCs, I think one of the things to encourage, I would say there are 5 issues I would like to leave you with. One is the preparatory work that needs to be done for CBDCs. It's very important that the central bank looks at the impact, the potential impact of CBDCs on monetary policy, financial integrity, financial market infrastructure, which we just touched on. The second issue is the project governance, making sure that you have a task force that actually involves the government. That makes sure that you don't run into, we've seen some countries where the central bank started on the CBDC alone, and then subsequently they start getting questions from parliamentarians and they cannot progress. So the best is to make sure that the Ministry of Finance is on board, so they are aware of all the issues that need to be tackled. As you saw from the presentation, there are going to be issues of regulations, laws being amended. So there are definitely many sectors that will be impacted. So when you have a high-level task force that is well represented, it means that everybody is on board and you have a buy-in right from the beginning. Also, the working groups that support that task force, you really want to make sure that you have that working group that will look at all the legal and macroeconomic implications, but also the technology, the technological issues. Because you're going to have new technology, how is it going to interface with the technology that you have? The other issue is the pilot, in terms of, before you launch, the pilot, make sure that the pilot is representative, that you are testing the CBDC in areas that will more or less represent the country. because you don't want to launch and then discover that there are problems that you had not looked into, because that can affect the confidence and the reputational risk for the central bank. The other point is make sure you start with objectives. Technology companies are going to sell you what they have. So the important thing is the central bank specifies its objectives. They clearly indicate these are the things that we want the CBDC to have. This is the functionality that we want the CBDC to have. Now, technology companies, show us if you can deliver this. We have seen some countries that started with the technology. If you do that, the company is going to sell you what they can do, but not what is best for the country. And then the consultations with the private sector are also very important. The commercial banks, they all bring in certain angles. They will be able to advise the central bank on how some of the proposals might impact on them, so that those issues are taken into account before you actually design. And also even in terms of the public, getting the public on board so that they are aware, so that there is information there, So those are some of the things that way you have quite a rapid uptake. So those are the 5 things that I think I would want to mention. Thank you very much.
Thank you very much. We really value this, free consultation, and we will take into consideration in whatever we do going forward. Now it's time to listen to the Bank of Tanzania, but I would like to say something here. I've seen someone raising a hand for quite a long time, called Kaluguru. If he's still raising the hand, if this person is still raising the hand, I would like to give this person, a minute or something. It would be.
There's somebody here who's been raising his hand for a long time, but also.
Okay, let me begin with Kaluguru. I think he's online. Okay. If you can do that, then I can move to the next one.
But you also have very limited time.
I know.
Okay, thank you. My name is Willie Martin, and I would like to address in Swahili because we have got our youth outside there who are listening and following this meeting. Kwa hivyo natuni Kiswahili. Yes, nafikiri ni wakati mzuri sasa kuangalia Tanzania ilipofikia duniani kwenye ile inaitwa World Crypto Adoption Index. Unaweza kuandika hiyo kwenye notebook, kufuatilia kwenye Google. World Crypto Adoption Index. Tanzania iko namba 19 duniani ya watu wanaoelewa na kufuatilia masuala ya cryptocurrency. Cha pili, cryptocurrency sasa hivi imetoa ajira kwa vijana. Mimi nawakilisha vijana zaidi ya 2000 tuko nao kwenye platform za cryptocurrency. Wanapata ajira, wanapata dola zao 50 kwa siku, 100 kwa siku, na hawaendi tena barabarani kufanya biashara za bodaboda. Maana tumeona bodaboda zimekuwa nyingi barabarani na zinaongezeka kila siku. Crypto inaweza kuleta ajira kubwa sana nchini. Kama serikali, kama BOT, wanaweza wakatenga taasisi au madarasa ya kufundisha vijana trading. Manake cryptocurrency ni sawasawa na bahari imefunguliwa mahali katika jangwa, an oasis in the desert, ya kuweza kuletea kipato. Hivyo basi, kama unaweza kutenga madarasa ya kufundisha vijana trading ya crypto, vijana wanaweza kupata ajira kwa mitaji midogo sana. Na serikali pia iweze kuruhusu kuwa na Bitcoin ATM machine ya kwanza nchini. Tuangalie hapa application inaitwa Coin ATM Map Radar. Kenya ina Bitcoin ATM machine moja Kenya. Fuatilia, andika hiyo. Ghana ina Bitcoin ATM machine moja, Botswana ina moja, Zimbabwe wana Bitcoin ATM machine moja, Uganda wana moja Tela, wana Tela machine.
Asante.
South Africa wana 13.
Mchango wako ni upi?
Mchango wangu ni serikali iweze kuruhusu vijana kutrade cryptocurrency na serikali iweze kusupport biashara.
Asante.
Thank you.
Kaluguru sijamuona, kwa hiyo tuendelee tu.
We should proceed now and be able to finish with the governor.
Okay, very good. Thank you for that confirmation. So please, I think we have heard a lot. And there's one area that we always forget, why people are incentivized to do what they do. Beyond what we can observe is actually the intrinsic value. This is a fundamental issue. And I think from the public policy perspective, from the behavioral side of things, these are some of the areas that we will have to dig deep. After this, I would like to welcome the Bank of Tanzania to say something on some of the aspects that have been raised here. Thank you.
Thank you for giving the Bank of Tanzania an opportunity. Let me start by appreciating all the contributions that have been made and all the comments and advice. We have been sitting here, I guess, on the side of Bank of Tanzania like sponges, absorbing everything, because this forum is very important to us in the financial sector, so that we understand the concerns, the sentiments, and learn a few things from all the experts who are in this room. I would not answer directly the questions, but I would like to make the following comments. One, you cannot outlaw something you are not conversant to. And because of that, the central bank, being the one responsible to regulate all financial intermediations, could only issue a warning that as far as we are concerned, the cryptocurrencies are not safe, and we don't know the rules of play. So if you want to go into the game, know that you are causing injury to yourself, and you should be individually responsible. We cannot protect you. That's why we issued a warning as a responsible institution. And that is why no one has followed you if you are going into, if you are participating in cryptocurrency transactions, because there is no law that prohibits you to do that. But when you suffer harm, don't seek protection from the central bank, because we are unable to protect. And two, at the moment, we cannot give timelines when we will issue regulations. I know many of you are anxious to know what are the regulations, but how can we issue regulations when we are still researching on how to, what should be the decision? Can we have Cbdcs alongside the cryptocurrencies? So until we have finished our research and we are able to advise the government what should be done, we cannot issue regulations. If you want to innovate, innovate. Once you innovate, you become visible. And when you are visible, then we can develop regulations so that your innovation is not harmful to the public or harmful to others. So those who want to innovate, the central bank is not proscribing innovation. Go along, innovate, and then we'll see how to develop regulations. In the same vein, Mr. Ligalama, we cannot authorize an unknown. You want an exchange agent? We don't know whom to authorize, unless someone comes to us with an application which we can consider. Feel free to bring in your application.
And what I can say is that the central bank is doing a lot of research work. But before we have ascertained results, we cannot publish. We only publish when we have ascertained results. That is why, honorable parliamentarian, you have said that the central bank does not want to learn about blockchain. Let me assure you, I have the best experts within the central bank on blockchain. And we are considering how to make the best use of that technology. And we are collaborating worldwide to understand what are the full uses of blockchain. Let me inform you, Honorable Member of Parliament, that it's not true that we are not aware of what is going on in cryptocurrency dealing. I did not want to disclose this, but I can comfortably disclose because you cannot regulate a game you don't know. So if you are participating in cryptocurrency transactions, know that you are participating with me. I'm there watching. So that at any point in time, if I want to come in to regulate, I will have known what is going on. So we are there, we are with you in the cryptocurrencies, not because we want to make profits, but we want to learn what is going inside there. So be assured that we are buying your cryptocurrencies, but for purposes of knowing how the risky the whole process is. Because of that, there was also a question that our parliamentarians are not aware. I think it's high time now. We should also go to Parliament to raise awareness of parliamentarians on digital currencies and cryptocurrencies. Otherwise, our people will not know well about the hazards they are getting themselves into. So I guess BNPS and your colleagues, we should request to have some time with the members of parliament on these issues. So we'll do that. We'll do that. So in a brief, I guess those were the issues that some of us wanted to know. Thank you very much.
Asante sana, Governor. Thank you very much, Governor, for those remarks. So we have come to the end of our exciting session. It's about follow the money. It's the future of money. I'm sure all of us have gotten something that we can think about, work with, advise, learn more. But crucially, I think I would like to say that this discussion is so important for the future of our economy. The fact that we are committing to being competitive, we are committing to participate in the global markets, that can't be on the real sectors alone. It has to go with the money flows as well. So that means a lot to all of us, and particularly for the financial system, banks, pension systems, insurance, telecoms, mobile money, fintechs, innovators, researchers, academicians, and everybody. So let me thank the panelists for your wonderful contribution and commitment. I would like also to thank the Bank of Tanzania, TBA, for organizing this, particularly thinking about the future of money. Tanzania has really made big strides, mobile money stories around in the world. Tanzania is in the spotlight. And from the enabler side, I think all the things that have been mentioned are clearly the foundations that Tanzania has as in terms of preparedness. And because we have learned from our colleagues, I would like to thank Inutu from IMF and Tim Masera from the Reserve Bank of South Africa, We have really enjoyed and we have really taken advantage of your contributions. We will work on them going forward. And for this, I would like to end this session and thank everybody. Welcome to this story of Follow the Money, the future of money in Tanzania. Thank you very much.
Okay, once again, a round of applause for the chair and a very good panel. And to all of us, as well as those who participated online for a very live participation. It is very evident that such debates are actually needed. And I was actually having a brief discussion here with a director from the Bank of Tanzania, and they are committing to actually having this kind of discussion going on, even if it is online, to get views and engagement of really the community at large. So those words right now, based on our timetable, we will be going for a brief 30 minutes body break, which will be having our breakfast. So the breakfast will be saved at the same location we had it yesterday. Welcome all for the breakfast, but please make sure you're back here on time at 12 noon. Right now it's 11:30, so we'll be back here at 12 noon to actually continue with our last panel, which is actually, we saved the best for last. I mean, we are all very excited. We learned yesterday, we talked about really what it takes to actually grow our economy, and it was very evident that we need the money, we need capital to actually really unlock the industrialization in Tanzania. So let's discuss about access to private sector credit, and all of us, let's make sure we're back here on time. Karibuni sana.